Most people think choosing between Dallas and Houston comes down to one simple question: which city is better? And that's the mistake, because the best city in Texas isn't the one with the most jobs or the lowest costs. It's the one where you accept the right trade-off. And if you choose wrong, you don't just lose money, you lock yourself into a decision that compounds for years. And here's what most people are missing: Dallas and Houston reward completely different strategies when it comes to buying real estate. Right now, Texas is one of the fastest growing markets in the entire United States, but the game has absolutely changed in our market. Rates are higher, insurance is rising, cash flow is tighter, so you can't rely on appreciation alone anymore. And if you misunderstand these markets, you either overpay in Dallas or you chase cheap opportunities in Houston that just don't perform. And both of those mistakes are equally bad, and they can follow you for years. When you break these deals down properly, Dallas attracts capital because of job diversity, corporate growth. Houston attracts investors because of lower prices and much better, much stronger rent to price ratios. But that right there, that's surface level thinking, because two investors can buy in the same city and get completely different results. So the real question is, what outcome are you looking for? Dallas is a growth driven market. Houston predominantly is a cash flow driven market. Higher prices versus lower entry, appreciation versus income. And here's where most investors get this wrong. They try to get both. They try to have their cake and eat it too. And most of the time, unless you're looking at an absolute unicorn deal, that deal just doesn't exist. So let's talk through some numbers and simplify it. Dallas, a $400,000 property, maybe you're getting $2,400 a month in rent. In Houston, you could have a comparable asset for, say, a $300,000 entry price, and maybe it's leasing out for $2,200 to $2,300 a month. So yes, Houston cash flows better, but here's where the math actually changes. If Dallas grows faster, your equity gain is actually significantly higher over time. So now you're choosing cash today or equity tomorrow. And both are right, neither is wrong. It just depends on you specifically as the investor. What's more important to your portfolio now, today? And I see a lot of the commentary on the Texas market, and a lot of times it circles around this. Houston comes with economic concentration, higher insurance in some areas, flood risk. Dallas comes with much higher entry costs, lower initial cash flow. Most of the time you're gonna have more competition in those spaces, especially premier neighborhoods. So you're not choosing a better city necessarily. You're choosing what type of risk you're willing to accept. If you want cash flow, Houston tends to fit the bill a little bit better. If you want long-term value growth, historically, Dallas has performed at a better rate. But here's the nuance. Bad execution with either strategy in any city is going to absolutely kill your deal. It'll kill cash flow. It'll kill your appreciation or your expected resale value upon exit in Dallas. Over leveraging means that you're gonna lose margin. And if you buy wrong in Houston, or if you buy in an area with really high vacancy, that cash flow, it'll disappear. So strategy and tempering expectations upon purchase is really going to matter more than exactly which city you pick. And here's a really important nuance that a lot of investors, especially new investors, they don't put enough weight or emphasis on. And that is your debt stack, your capital stack, your lender. What does lending do to the entire equation? So in Dallas, when you're looking at really tight cash flows, higher prices mean that a change in interest rate is going to hit a lot harder, and your margin for error is way small. That means that margin for error in a cash flow positive versus negative asset might be $50 a month. And in real estate, that can be absorbed in one lock change. And here's another layer to consider. A lot of the Dallas appreciation is already being priced into the market. So if you're late, your upside, your total upside, it's actually going to shrink and compress. That's why sub-markets matter more than like specific cities. And people don't invest in Dallas in particular. They're investing in sub-markets around the greater metroplex. So how do you decide which city, which strategy is going to be best for you? What's your goal? Cash flow, long-term wealth. What's your risk tolerance? How long are you looking to hold? Because the same deal can look great or it can look terrible depending on your preferences as an investor. I send out a 3 times a week email list that has usually 5 to 10 properties. And for every email list I send out, I'll get 100 replies back. And some of them are like, why would you send me? This is absolute trash. And other replies on that exact same deal are, oh man, this is absolutely perfect. I'm going to go ahead and get my financing set up, and we're going to be submitting an offer this afternoon. So it's amazing the range of response you can have on the deals that hit, just depending on your specific nuance as an investor. And those are things that we can chat about. And here's one controversial take that I personally hold, and that for most beginners, Houston is offer a safer entry point into the market, but not because it's a better city, but because mistakes are going to cost you less in the Houston market. But if you can hold long term, Dallas might be the one that's going to outperform just based on historic growth patterns. So at the end of the day, this isn't about Dallas versus Houston. It's about choosing the right strategy and zeroing in on your strategy and the key risks associated with each strategy before you go ahead and take the plunge into your first deal. Because once you buy, you're locked into that thing. Real estate is not meant to be transacted every 6 months. You're not in, you're out. You're going to go ahead, you're going to purchase, you're going to plant your flag there for the next 3 to 5 years minimum. So if you're seriously considering investing in Texas, you need clarity on your strategy before you commit capital to that strategy. And if you want help analyzing deals or choosing the right market, that's exactly what we do at Steffen Realty Corp. And if this video helped you think more strategically, please subscribe, because this is how you avoid very expensive mistakes in the market. And we can't wait to work with you.